How equity mutual funds are taxed. That's our topic for discussion today in the Market Secrets investment series. Before we get started, Market Secrets is proud to announce launch of Algo Traders Program ATP. If you are someone who is interested in learning end-to-end algo trading, then check out our ATP program. I'll leave the link to it in the description section of this video. And with that note, let's jump into today's session on taxation of equity mutual funds. Equity mutual funds are nothing but mutual funds that will invest greater than 65% of their corpus into equities. So if a mutual fund invests 65% of its corpus or more into equities, then it will qualify as equity mutual funds. So all the small cap funds, mid cap funds, and large cap funds, index funds, so almost all of that will fall into this particular category. So that's category number one. Now there is other classification which is hybrid funds. This is nothing but your balance funds which will invest both in equity and also in the debt component. And if such hybrid funds has 65% or greater exposure towards equity, those also qualify under equity mutual fund taxation. Okay, so taxation for the hybrid funds with greater than 65% of equity will also be fall into taxation of equity mutual funds. So both will be under the same categories. Okay, so this is nothing but the classification. So which one fit into the equity mutual fund category? Now let's jump into the taxation part. First part of taxation is capital gains from these mutual funds. So if you are investing into these mutual funds and if you are redeeming within an year, so if your investment duration is less than 1 year, then short-term capital gains is applicable at 15%. So for any returns that is generated by these funds, right, you need to pay taxes at 15% under STCG. Okay, so that's for investment duration less than 1 year. In case if your duration of investment is greater than 1 year, then you need to pay taxes at 10% under long-term capital gains tax. But the catch here is that you can claim up to 1 lakh rupees exemption every year under long-term capital gains. So that first 1 lakh is completely tax-free. So that is one advantage for you. So you can use tax harvesting to reduce your taxes to 0% to the first 1 lakh rupees. Okay, so this is how the capital gains from equity mutual funds are taxed, and this is the lowest taxation category. Okay, so I'm repeating, this is the lowest tax that you can pay on the capital gains. Make the best use of it. Now let's move to the second part, which is dividends. Okay, so mutual funds also can declare dividends and it can pay that to the investor. So this is just like stocks. So stocks generally pay dividends. Likewise, right, mutual funds also can pay dividends. But the difference is the stock dividends is declared by the company. But when it comes to mutual funds, they take some part of the returns or some part of the capital even, and they can declare it as a dividend. So if you look at the mutual fund category also, we have growth funds, and earlier we had dividend funds, which is now renamed to reinvestment of income distribution come capital withdrawal option. So the dividend funds are now renamed into reinvestment of income distribution come capital withdrawal option, and they generally give the duration as well, like whether they can declare dividends every 1 year, every 6 months, every 9 months, every 3 months, every month. So there are different category. So if you opt for such mutual funds, right, so if you take even any index fund, right, for example, right, Nifty 50 index fund under UTA, you will generally be given multiple options while investing, whether you want to go the growth route or whether you want to go through the reinvestment of income distribution come capital withdrawal option. So I strongly suggest not to select that option, because if you select, your returns will be paid in the form of dividends. Okay, so you'll have to keep a track of those dividends, because those are returns generated by the funds, or there might be return of the capital as well. So the problem here is, if you opt for such funds, you will get dividends. Okay, and dividends are now taxed at slab rate. So you will not be in control of when the dividends will be paid, and on top of that you need to pay additional unnecessary taxes. For example, if you're in 30% bracket, here long-term capital gains is 10 percentage. Okay, so if you invest in growth funds, you can pay taxes at 10 percentage of your returns. But if you select dividend option for the same fund, you'll have to pay taxes at slab rate for the dividends that is being paid to you. So which is a complete madness. No one with the right mind would go for this kind of funds. Okay, so always go with a growth option. That's my suggestion, because if you go through the dividend option, I mean, if you pick a dividend fund type, then your returns will be taxed at a slab rate, which is a heavy punishment. Okay, so don't do that. So in simple terms, dividends from your mutual funds will be taxed at a slab rate. So it's better not to have this dividends, because it doesn't make any sense to get that money out and get taxed. It's better to leave it invested and let it grow. So that's the point you need to remember. And now, when it comes to SIPs, right? So if you are investing through SIP, like every month you will be making some investment. So while redeeming, you need to be very careful, because if you redeem all of it, right, some might be eligible for short-term capital gains, some will be under long-term capital gains. So if you are redeeming your SIP investment, make sure you are redeeming the investment which are greater than 1 year. So either adjust your units or pick only a part of your portfolio, or you can have different portfolio for different financial years. So if you go that route, it will be easy if you want to do the tax harvesting properly, and if you want to reinvest that money, and if you don't want to run into this capital gains complications while redeeming your mutual funds. So with that, we have come to the end of today's episode. If you have any queries, comments, or feedback about this episode, leave it down in the comment section. I'll be happy to address it. Also hit the like button if you have liked this video, and share it with your friends if you find it useful. Also subscribe to our YouTube channel and click the bell icon to get notified whenever we upload a new video, conduct a live session. Thanks for watching. Have a great day. Goodbye.